The big news over the weekend was gold hit a new all-time high.
I love gold.
You're hearing me right? Gold, like the physical commodity, the precious metal gold, hitting a new all-time high. Gold soars past 2,100 to new record, and analysts don't expect it to stop there. Spot gold prices rose to a new record high. Prices of the yellow metal have risen for 2 consecutive months, boosting demand for a safe haven asset. So classically, when you think of gold, that's where people put their money when they think everything else might be under a little bit of turmoil, a little bit of craziness. Gold prices are expected to remain above the 2,000 levels next year. So very quickly, if you want to look at gold, particularly the actual commodity, you look at GC, that's the symbol in the futures market. When the market opened up late last night, we hit a new all-time high of 2,152, obviously clearing the high that we saw in May of 2023, and then also the previous all-time high of August of 2020, which I think we all know what happened there. That was like the craziness of when the world was shutting down. Once again, gold, a store of value when you think that the world or the economy or something very, very serious is going belly up. And right now, I do want to get into maybe why we're seeing the current phenomena. Here's how to invest in gold as it hits a new all-time high. For many investors, gold is looking hot right now. The precious metal just touched an intraday record of 2,135 an ounce thanks to its part in the haven status. The more volatile the world gets, the better gold tends to do. Bullion has rallied almost 16% since early October, a surge that was initially sparked by the start of the conflict in the Middle East, but has since been driven by bets that the Fed will shift to monetary loosening early next year. So let me explain that. Right now, when people are looking around and they're like, I don't know about the equity market, I don't know about the options, futures, crypto, we don't know what's going on. People started to pay attention to fixed income. I'm talking about by the government, treasury notes, bonds, bills. Well, as they started to jack up the Fed fund rate, the payment for investing in these was pretty good. Right now, you can sit in government-backed really fixed income, the bonds, the notes, and the bills, and get in excess of 5% APY. So that ended up being kind of the safe haven where people are putting their money as opposed to putting it under the mattress, because the argument was, hey, you might as well get 5% on your money. The only way you won't, I can't say it's completely riskless, but the only reason you won't is if the US government basically blows up. And at that point, we have bigger concerns, so you might as well just do it. Well, now that it seems as if we've hit the terminal rate, and what I mean by that is the height to which the Fed is going to run up the rate, it seems like we've maxed out. And it also seems like by mid of 2024, they're going to start to cut it. So that 5% that people are receiving now, it's going to start to drop and drop and drop. And all of a sudden, you're going to have investors probably looking elsewhere because they're not getting the same yield. So they're going to look for a quote unquote safer place to put their money as those payments start to drop from the world of the government-backed fixed income. And obviously, people are looking at gold and also Bitcoin. I'll touch on that in a second. But anyway, gold's starting to look pretty good because the bet is that obviously it's going to start coming down and down and down, the payments from fixed income. So where else can you safely put your money? Gold. Gold, and that's exactly why we just saw a new all-time high. So gold previously had a last record of 2,075 an ounce in August of 2022 when the Rona period boosted. This time around, its rise has been driven by geopolitical risk and traders aggressively pricing in rate cuts from March of next year. Once again, it's a classic supply and demand type of issue. If there's going to be more demand, price goes up. Fed Chair Powell said last week that the central bank's policy rate well into restrictive territory in comments that are being interpreted as largely dovish by the markets, lowering borrowing costs, typically positive for non-interest bearing bullion. So really, to sum it all up, it is a shift in monetary policy, as it's almost like a vibe that the Fed has done their job. They're like, all right, they've maxed it out, ideally fighting inflation. Hopefully they're done with that. And now we're kind of seeing the unwinding of that position, which typically favors the gold investment. Obviously, the market is very much front running it, and I am in agreement with these analysts that yeah, it'll probably hold above this 2000 level throughout 2024 as those rates come down and down and down, because I think there'll just be more and more demand to invest in gold. The backdrop for gold is looking supportive going into 2024, driven by the Fed's interest rate path and higher geopolitical economic risks. According to one analyst, on top of that, central bank purchases are going to sustain next year and could potentially offset any weakness in physical demand. On top of that, don't forget gold. A big argument of like why you should have it is because of the great devaluation of the US dollar, not at all being helped by the fact that we're almost $34 trillion in debt. Remember, if you're just sitting on the dollar, you're losing value. Like $10 now is not worth what $10 was a decade ago, 2 decades ago, 3 decades ago. Sitting on cash it actually means you're losing buying power because the continual devaluation. Part of that is because the US national debt is just going up and up and up, but more so to see the rise and fall of the dollar. I mean, it's down about 96% over the past century and change. It's down 95, 98, depending on the time frame that you're actually looking at. We're just seeing the actual buying power of the dollar down and down and down. And then obviously we're seeing the inverse with gold. Let me switch this over to the weekly chart. We're just seeing it actually gain strength. And that's, once again, just to drive this point home, people just want to like store their value somewhere. That's why it's called a safe haven investment. So you see what's going on with gold. Yes, you can get into it on the futures market. There are gold-based ETFs. GLD is one of them. The other thing that I was recently looking into, and I'm kind of new to this world, but I just want to share it with you, gold IRAs. What is it, how it works, and the risks? A gold IRA is a retirement account that allows its investors to hold gold coins or bullions or other precious metal as investments. You can set up a gold IRA with pre-tax or after-tax dollars through a special custodian or broker. The IRS permits self-directed IRA accounts to purchase gold, silver, platinum, and palladium bars, coins, or other approved physical forms. So obviously the gold ETF GLD, well, that's going to be an ETF. You have a gold futures contract, which is going to technically be physically settled, not cash settled. But once again, like you're rolling it. Another option that's available to you is an actual IRA. So obviously there's going to be certain tax advantages to this. And yes, it's a specialty type of IRA when you can have the physical commodity. Recently, the one that I've been looking at, this is called GoCo, and you can check it out. You could give them a call and see what it's all about. I myself now seeing gold going crazy and understanding what's going on in the world of monetary policy, became more interested in a tax advantage way to maybe benefit off of what's going on in the world of precious metals, not just gold. We still silver looking good, palladium's looking good. A lot of these precious metals are looking pretty good right now. So I just want to throw this out there because I myself didn't know anything about this. So I just thought I would share it obviously with all of you in case like you just want to see what's going on, give them a quick call, something like that, just to, or at least give it a quick Google search just to see what the world is all about when it comes to a physical commodity IRA. Once again, something new to me that I think I should at least be a little bit more knowledgeable about. I'll put all the links and that stuff. It's in the description. I'll put it below, but you get the idea.